Hi, welcome to Tabs 2 Cents. Today on the show, we have Lawson Steele, and we're talking about carbon markets. Hope you enjoy the show.
Welcome to Tabs 2 Cents, the show where we discuss multiple income streams and macro factors affecting the world today.
Hi, Lawson. Welcome to the show.
Hey, Joe. Thanks. Good to be here. Just back from 2 weeks holiday in the sun, which is nice. So getting stuck back into it.
Yeah, just diving right back in with the podcast. That's awesome. I thought we could just start with a little introduction, who you are, what you've been working on lately.
Yeah, look, I mean, I'm by trade, I guess, for the last 35 years or so, I've been an institutional equities analyst covering the utility sector around the planet, power, electricity, and gas. And as part of that, since 2004, I've been covering the European carbon allowance market. And over the last year, I've sort of given up the day job of equity analysis and focused just on carbon, and joined or set up a startup with some friends on carbon called Kakubi.
Awesome. Yeah. And I want to dive into Kakubi and what that is. But before we do, I thought we could just maybe have a little history of the EU ETS. I know you've been following it for a while, and what that is and how it differs from the voluntary markets.
Yeah, I mean, that's really important because I think a lot of people do really confuse the two. The EU, when people use carbon credits and carbon offsets, they typically mean things like planting trees and capturing carbon from the atmosphere, and therefore that gives you a green token, if you like, which you can use to offset your own emissions. So a company can decide how it can pollute as much as it likes and decide whether or not to offset some or nothing or all of that via buying these voluntary carbon projects. The problem with the voluntary carbon projects are lots at the moment, unfortunately. They haven't got their act together properly. There are all sorts of issues about double counting, the quality of the projects, fraud, and so on. And ultimately, it's a $1 billion market. And in that $1 billion market, you're talking about 12,000 different projects plus. So it means that the liquidity of the projects itself is very low. It's easy to get in because people want you to invest, so you can get in quite happily. But trying to get out is really, really difficult. This is completely different to the European carbon allowance market. The EUAs, or European carbon allowances, are there to force emission reduction, right? So you, as a emitting company, every 30th of April have to go to your government and say, look, I have emitted 1 million tons of carbon, to which you have to then deliver 1 million EUAs, European carbon allowances. And the thing is that every single year, that bucket of European carbon allowances reduces, because it's the EU who issues those allowances. So it's like one supplier, and they reduce us each year, so that by 2030, the number of allowances issued is the same as the actual climate target they have, which is a 55% reduction in emissions based on 1990 levels. But the fundamental difference, therefore, is that the EU carbon allowances are forcing a reduction in emissions, whereas the voluntary ones are, offset if you like to, as much as you want to, pollute as much as you like, kind of thing. And the EU carbon allowance market is worth $900 billion, not one. So there are not multiple projects. It's ubiquitous. There's just one type of carbon allowance. So you're not dividing that 900 billion by 12,000 as we did in the case of the voluntary. So it's super liquid. It's 80% of the value of the emission trading schemes around the world. So the EU one is. So it's the biggest by far, and it is forcing emission reductions.
Yeah, absolutely. I think that the main takeaway for me with those markets is the voluntary carbon market is still very early and kind of messy. whereas the EU ETS has been around a little bit longer, and there's some history there. And it's been tested as well. That the war in Ukraine is a good example of that. I kind of wasn't sure what governments were going to do when that happened, whether they were going to kind of fall back, but it seems like there are commitments that they've made and legal obligations. I wonder if you talk a little bit about the security of the EU ETS allowances.
Yeah, I mean, look, you're kind of sort of saying the right thing. In my view, is that in a year where you threw as much shit as you could at the European carbon allowances and at the European political system, it withstood all that and came out still massively in support of making sure that the climate targets are met for 2030. So if at the beginning of last year, pre-knowing anything about Ukraine and so on, you had said, we're going to have a war in Ukraine, we're going to have massive social costs for energy, and we're going to have food shortages and etc. And despite all of that, you will find that the EU will stand behind its climate targets and in fact tighten them. You'd have thought I'd be barking mad, but that's what happened, right? So we've tested politically the EU, and through it all, they've actually tightened up the emission targets. So originally they're going to cut emissions by 40% by 2030. This is all based off the 1990 level, but that 40% has been increased to 55% as a European whole. But for the EU emission trading scheme, which is 40% of industrial output of emissions in Europe, it's an even tighter target. It's 62%. So they've said, okay, the EU, we're going to stick by it, and we're going to put more onus on climate reduction on that vehicle, which means that the non-EU ETS, the other 60% of emissions, have a commensurately lighter target, shall we say, than the 62% being enforced on the EU ETS. So it's withstood tremendous political pressures and has come out even tighter than before. So we're going through a process which, as is usual with the EU ETS and Europe as a whole, there's a very long deliberation so that everybody can have their say, everybody can work out whether or not this is, chew the cud so that nobody actually is surprised when they come up with the final legislation, because there's been a long lead time. So we've gone through this green process now, what they call the Repower EU or the 55 process, which is just this tightening of the 2030 target. And that's been ongoing now for about 2 years or so. And we're now just simply in the rubber stamping. So Parliament, Council, Commission have all agreed in principle, and now it has to go through the Council voting process and through the parliamentary voting process, which will happen. It's beginning to happen already, and will finish probably by June or so. And that's just simply because that's lots of things they're voting on, and they just need to get them in order. But they've passed all this stuff, and they've stuck by it, which is amazing, really.
Yeah, and you've had some calls on the EU ETS market. I know in 2006 you went bearish on it and it tanked, and then 2018 you sort of switched to a bull mindset for the EU ETS and allowances, and those are both correct calls. I thought before we get into Kakubi and why that's the right way to get exposure, I thought I would just ask quickly where you think we are in the cycle with the EU ETS market.
Well, look, I mean, as you point out, I've been fortunate to have called it right in those two instances. So it's kind of interesting just to know why. Back in Jan 06, I realized that the system was completely oversupplied, and I said the price is going to zero when it at the time was at 30, and it literally went to zero 11 months later. It's extraordinary, really. If you think of any commodity, it never gets to zero, right? And then they rebalanced the whole system when they realized there was all sorts of issues about auditing and everything else, and people have been lying about their emissions, so they've been getting too many free allocations, which is why you had an oversupply. So in 2008, they rebalanced the whole system. And then you had the great financial crisis, which meant that industrial output fell, which meant emissions fell, yet the supply stayed at the same level. So you had this complete oversupply in the system. And it just got seriously, tediously dull because the carbon price was down at 4 or 5 euros, which achieves nothing, because ultimately what you're trying to do is to get the carbon price at such a level which makes the more carbon intensive processes more expensive than the less carbon intensive processes. So, for example, coal-fired electricity emits twice as much carbon as gas-fired electricity. But in the past, let's go pre-Ukraine crisis, you had a gas component of electricity costs, which was more expensive than the coal. So it's cheaper to produce with coal, but coal produces twice as much carbon dioxide as gas. So what you needed was the carbon price to increase to such a level which made the total cost of coal plus carbon more expensive than the gas plus carbon content. So for many years, the carbon price was in the doldrums. From 2013 onwards, they had a few attempts to try and rebalance the system or do something to get it going again. They're all a bit of a joke. And then in November 17, they finally agreed this proposal they've been mulling over since about 2015. And then I started doing the numbers, and I thought, this is just insane. I mean, I thought I was going to spend 2 hours updating my carbon model, and I actually did about 6 weeks because every time I looked at it, I thought, surely this can't be right. And that's when I went bullish in Jan 18 when it's at 8 euros. So you could argue that, it's been a 11, 12 bagger. Isn't that time to just, take it and thanks very much. But the reality is, I think it's got much more upside. We are probably going to hit 150, 200 quite easily, and quite frankly, it could easily go way beyond that. Simply because you've got a multi-year trading deficit, so the supply into the system is not sufficient to meet the emissions or the demand. And if you've got a multi-year deficit, then you have a problem that when it comes to, let me just step aside for a second and explain this. So on the 30th of April, when you've emitted your 1 million tons, you go to your governments and you have to deliver your 1 million EUAs, European carbon allowances. If you don't have those 1 million, then you face a penalty price. And the penalty price at the moment is 121 euros per allowance compared to the market price of 96. So clearly at a premium. You face a penalty price for 121, but B, you still have to deliver those allowances the following year. So you can either deliver now or next year with a 121 penalty. But if you have a multi-year deficit, then your opportunity cost in the first instance is the penalty price of 121. But when you get to that point, you realize that you still have to buy the allowances, which by that stage are trading at 121 because there's a deficit in the system. So then you realize the opportunity cost is not just the penalty price, it's the penalty price plus the allowance. So it's 242. So you're prepared to pay up to that level. But when you get to that level, you have the problem that you still haven't bought them because there is a deficit. Now the opportunity cost is the penalty price of 121 plus the price of the allowance, which is now trading at 242. So actually your opportunity cost is 363. And you can carry on that into infinity effectively. But that's why we're getting into a situation where we have deficits each year which become cumulative, and with a penalty price in place means that at some point this just has to go north, right? At some point it can go only so north because there will be a political reaction again, but we're nowhere near that yet. So I'm bullish.
Yeah, and I think there's lots of reasons to look at it that way. I know when I started looking into this market, one of the areas that I thought I would try to research are companies that are decarbonizing faster than others, especially within their own industry, because that way they can hold on to their excess allowances and then perhaps sell them back into the market. Because One thing I know about the EU ETS is the allowances can be held indefinitely, which is also, I think, a good reason for your startup there, Kakubi, because you should, in theory, be able to hold the allowances as long as you want. I wonder, maybe we can just talk about, now that we kind of have a baseline for the thesis on carbon, we can just talk about Kakubi and what you guys are doing and why you think that that's the best way to get exposure to this market.
Yeah, I mean, Kakubi is quite exciting. As I said, I threw in the day job just over a year ago, really because I wanted to give it up. I've had enough of staring at utilities balance sheets, 35 years. Somebody had to. But about 3 or 4 months before that, Kakubi guys got in touch with me, and they'd been coming at it from the blockchain angle. And I've been coming at it from, surely we can do something more than just forecast the carbon price angle. So it's a pretty good marriage. And the reason we set it up is that there's nothing like it on chain. It is today difficult to buy the carbon allowances, the physical, and there are lots of things you can do with it. Not least of which is investment, but if you want to be green, or if you want to create all sorts of apps or protocols on top, which I'll talk about in a minute. So it's been, we had two options in the way we did this. We could have gone a bit underhand and gone to some dodgy jurisdiction and been anonymous and fly under the radar kind of thing. But that's not what we're about. So we spent the better part of 3 years, I guess, in all, spending an awful lot of time and money on lawyers to make sure we got to the stage where we can actually put this on chain, and that's what we've done. So you today can go onto the Kakubi website. You can attach your wallet, and on the back of that, pledge the USDC you want to invest. We then, on the background, go and buy the European carbon allowances, and then you mint your Kakubi token, KKB, Kilo Kilo Bravo. And with that token, then, and if you want to redeem it, you go the other way around. So you can take delivery of either the EUAs if you are able to and want to. Really, probably only compliant industrials will want to do that, or you can take the USDC. So for me, thinking about it from a financial perspective, if you have a portfolio, a crypto portfolio, for me, it's a complete no-brainer to have Kakubi in there. You've got to have a Kakubi token. Why? Because the Kakubi token is a completely new asset class. It's not an equity, it's not a commodity, it's not a bond. It has very low correlation with those other asset classes, so it doesn't move in sync. And in a portfolio construction, if you look at any portfolio theory, it'll tell you that diversification is a very good way to reduce the risk of the portfolio while still retaining the upside performance of it. And on top of that, you've got an asset which, if I'm right, has got an awful lot of upside. So you're reducing the risk and increasing the upside. So why wouldn't you have that as a significant proportion of your portfolio? And actually, if you look at the last 13, 14 months and plot the EUA price or the Kakubi price against Ethereum or blockchain, or take your pick, whereas they've gone down 70% or so. Okay, they recovered a bit of late. The Kakubi or EUA has gone up about 50%. So you would have outperformed 150% over that time period. So as an investment is bleedingly obvious for me. And then the second thing is actually you are being green. Well, not just green, you're being super green. It's the best type of green investment you can have. And that's, it's funny, everyone likes to say, well, I want to be green. But when it really comes down to it, if stuff is hitting the fan, as it has over the last, end of last year or so, financially, people care more about their money than being green. But in this case, you can care about your money be super green as well. You can sit around the table, next week and say to your pals, what have you done for the climate this week? Well, I bought Kakubi, right? So I've forced European companies to reduce their emissions, and I got a bloody good investment as well. So that's what it does. But there's another element too, is that because we built this on the Ethereum platform, we have what's known as the composability of Ethereum. So in other words, people can come and build apps. For example, they might want to have an app which says, look, I can see you've just gone to Safeways to do your shopping. Your carbon footprint is X. Do you want to offset with a Kakubi token? Yes, please. Bang, done. So in the background, you bought a Kakubi token, and you've gone. You've offset effectively that trip, but you still have an investment as well. Or you may be on a small medium enterprise, and you want to design or build a much better way of them getting finance or buying their carbon allowances. They're more in a better way, in a cheaper way than they do today. And you can create a protocol on top of the Kakubi which does that and utilize the Kakubi token in the background. Or there is just a plethora of things which are going to happen. You might want to trade futures on chain, options on chain which use Kakubi tokens, whatever it is. You create this ecosystem, right? So we have essentially three phases to our growth: the simple bridge on chain of the EUA market. Then you have secondary trading in the Kakubi tokens, and the third one is this ecosystem which we're building. So that's kind of Kakubi in a short and sweet way. But it's exciting. It's really exciting. The potential is just vast. There are very few tokens on chain which are backed by assets, and Kakubi is one of those. So it's backed by RWA, real world asset. And if anybody wants to have more engagement and understand what's going on in Kakubi and in the carbon market, come and join our Discord channel. We've got a Discord channel of about 300 members or so far, which has grown pretty quickly. And there we chat all things carbon and crypto and God knows what.
That's awesome. I think you've solved a problem for people with this token, because I know for me, when I first started looking into this market, one of the questions I had was, how do I get a real physical commodity out of the EU ETS? I'm in Canada, so it's not that easy. And I think that what you've done here has allowed me to do that. But the question that I have is, you're backed by Ether, and you guys, I'm assuming, will hold these assets in some kind of database somewhere, but can you buy partial tokens, and do you buy it? I mean, because these assets, they're kind of, the price is carried by the futures. They don't close every day, correct? So how do you price them, and how do you hold them, I guess?
Yeah. So the EUAs we buy, we put in the EU Union Registry account. So the EU controls that. So it's extremely well looked after and regulated and safe and all that. You can buy a proportion of tokens. It can be half a token, a full token, 1.7, 1.2, whatever you want. So it is divisible. We do have a minimum order of $200, but it's divisible. And so this, let me just go back. So I said we got 3 phases of growth. The first is the bridge, which is what we're kind of in today. And there you can deposit USDC. We buy the EUA, you mint the token, and vice versa. The beauty about that today is that because we've got a $900 billion market we're bridged to, we have no problems with liquidity whatsoever. So if you want to build a $5,000, $50 million, $100 million position, we can do that very quickly and exit as well, which is important because people obviously need to be able to do both ways. And then the next phase is when we get the secondary market, where people are selling tokens to each other or fractions of token to each other. And that's coming. We're doing liquidity pools and market making and everything else. So you can begin to at that point you can do whatever fraction you want, right? And just one point I want to make is that, you say you're sitting in Canada and here you are doing something for the EU. It's not actually doing something for the EU. You didn't say that, but I just want to make the point that, if you're investing in the Kakubi token, you're forcing, yes, European industrials to reduce their emissions, but they're reducing emissions into the global atmosphere. So it doesn't matter whether you're investing in Europe or you're investing in Latin America or India or China, wherever it is, you are helping the whole globe.
Yeah, absolutely. I agree. It's the same planet for everybody, regardless of where you live. And that actually brings up a question that I had. I know that, with every asset, there's always risks. And one thing, well, we can go over some of the risks maybe as you see with carbon, but I wanted to ask about the new Article 6 in the Paris Agreement. I know that what they've said is they're allowing other countries to help each other with NDCs if they wish. And I wasn't sure if that could perhaps affect the EU ETS in a way of, bringing in more allowances than they currently have planned. Maybe, I know they're like right now they're linked to the Swiss account. If perhaps they were linked to some other countries and other markets, they may get those allowances from, South America or whatever. Do you see that as a risk, the sharing of emissions for the EU ETS? Do you think it could flood the market?
No, I don't, is the simple answer. Article 6 is really is all about the voluntary carbon market, and whether, for example, if you have a project in Ghana, let's call it a forest in Ghana, which you have invested from, let's say you and I have done it, right, from England and Canada, putting money into Ghana. Ghana of course, has the trees and is taking down the carbon from the atmosphere, but then you've got Shell who comes along and says, "Oh, I'll buy that project," and then they claim that they're reducing carbon for the atmosphere. So now you've got Ghana and Shell both claiming that they're reducing carbon from the atmosphere for the same project. So you get these issues of double counting and so on. So that's part of the, but then I said that's got nothing to do with the European carbon allowance market. There is, nevertheless, is probably what you're hinting at, is there are questions now and again, discussions about whether to add or combine some of the voluntary carbon offsets into the EU ETS emission trading scheme. I don't think we're going to get the voluntary market integrated into the EU ETS. It could happen maybe in 20 years' time once the emissions in Europe drop dramatically and so on. But for now, I think it's just too messy, and there's no reason why it should be. It's just like, comparing apples with pears, and you're going from just a European scheme to international stuff and so on. And they have tried this before. They tried it back in phase 1 and phase 2, which went up to about 2012. I guess it had to split over into phase 3, which ended in 2020. But they had what they call the CERs, and they did allow projects around the world which were invested in and reduced emissions, providing if you're a European company and investing in those projects, you could claim those CERs and work them into the system. But it ended up being really messy, really difficult, massive fraud, and it's just a disaster. So I don't think there's any appetite for that today.
Yeah, I think that it's a risk, but I think, as you say, since they've tried it once and it was really messy, maybe they'll think twice before they try to integrate CERs or offset projects in again. And I know some closed markets still do, but perhaps it's on the way out for them as well. I wonder, it's kind of interesting because the voluntary market, not to flip-flop too much here, but when I thought about blockchain solutions and carbon allowances or carbon credits, the first place that I went was to the voluntary market because it is so messy. And when you go on chain, it allows that transparency. So you can see where the offset came from, how old it is, what kind of project, who made them, who sold them, and all those things that come with the on-chain transparency that you get. I wonder, do you guys have any plans with Kakubi to go with a voluntary token, or is it just too detailed and kind of crazy for that?
No, we don't. I get inundated with requests about voluntary projects, and people say, "Hey, I got this great," and some of these projects are good, or on the face of it, without having audited them. But there are so many. I kind of think of the voluntary market rather like the debt market, where you've got corporate debt. Each company has a multiple series of debts. Each of those debts, each company, you've got to look at the fundamentals of that company. And some of those debts are illiquid. But I think the voluntary market actually is even worse than that, because it's you've got to do your due diligence on every single project, right? So if you want to look at this forest in Ghana, to keep that theme, you've got to go down to Ghana, you've got forests, you've got to work out whether they're planting new trees, or is it afforestation, deforestation, to preventing it, would the trees have grown anyway? What happens when the trees start dying? Did they get replanted? Yes. What about the dead ones who've now released their carbon back into the atmosphere? What are you doing about that? Oh, yeah, we'd have to plant some more trees for those, and then for the others which fall over, which becomes an infinity game. And then let's assume you've done all that and you're happy with all, numerous projects. You've lined them all up. You looked at 1,000 projects. Good luck. And you come up with all your fundamental theses. Now you've got to value each one. And you can't value one against the other. It's down to your discounted cash flow for each project. And each person is going to have a different discount rate. And it's just such a mess. So for that reason and all the others, I don't see us doing that. I think what we're likely to do and will do is look at other emission trading schemes. And I think there will be other countries. I mean, already have some, of course, like 2 in the States, the West Coast, the Reggie. We've got New Zealand, China, but that's really illiquid at the moment. You've got Switzerland, you've got UK. But I think other countries on top of that will bring new emission trading schemes, or build new emission trading schemes. So we will grow with that. And even in Europe, I mean, crikey, we've got what I call ETS1, which is what we have today, but ETS2 and ETS3 are coming. ETS2 being transport, ETS3 being buildings. They'll come, maybe in 5-6 years' time. So yeah, Kakubi is pretty exciting. We've got loads to grow there. So if anybody's interested in participating in Kakubi itself rather than the tokens, give me a shout.
Yeah, absolutely. And I think just before I let you go, I'd probably be doing a disservice to any listeners without asking about the overall energy picture in general, because I know that you've been following energy probably longer than carbon. So I think, especially with carbon allowances, maybe the biggest risk is that we actually succeed and decarbonize really fast, and solar takes over the planet or whatever, and there are no fossil fuels to offset. But the more you look into it, it's depending on how you see it, it's just kind of unfortunate that probably isn't going to happen, because fossil fuels are so integrated into our society, and it's most likely that we're going to continue to burn coal and other things for longer than people think. I wonder if I could just ask you how you see the energy picture shaping up moving forward, let's say 10-20 years, just before I let you go.
Yeah, sure. I mean, undoubtedly. Well, if I look at Europe, just as an example, not because of Kakubi, but because that's the last market I looked at properly in depth the last 8 years or 10 years, whatever it is. But it's kind of symptomatic of what's happening elsewhere. So if I look at the renewable companies, right? So be it Ørsted, the Danish wind producer, or RWE, who are also doing that, or Iberdrola, who are also investing around the planet in renewables. I hear now and again, all we've got to do is accelerate the renewables growth. Well, you can't, because if you look at the supply line or supply chain of renewables, you've got the OEMs, the original equipment manufacturers like Vestas and so on, who are already working at full tilt. you've got RWE, Iberdrola, E.ON, Enel, Endesa, you name them. They are also working at full tilt. They don't have any spare human capacity. They cannot get spare sort of equipment. And on top of that, their balance sheets are fully utilized. They don't have any spare cash. So you can't just ramp up that renewables pipeline, even though that's what we're talking about it. That's what the EU is trying to do. And yes, it will speed up, but in the latter part of the decade, nothing's going to change over the next 3, 4, 5 years. So I can't see that accelerating. You also have a fundamental issue today with renewables. You can't just say, well, you know what, we'll replace the whole fossil fuel and all the conventional generation with renewables. Well, you can't do that, because today the battery technology which backs up that renewables, and by renewables I mean wind and solar predominantly, because of the intermittency of wind and sun, because it's only there for 12 hours a day if you're lucky, certainly less over here in the UK. Although Canada's probably not too good either, is it? But the battery technology we have today is brilliant for what we call peak attenuation. So in other words, when somebody, say we're playing the sort of a cup final, football cup final here, soccer cup final, and everybody goes off at halftime, makes a cup of tea, and that puts electricity through the roof. For that peak, then the battery's really good. What it's not good for is baseline, right? So there's a base load of energy, which, let's say that just to throw some numbers out, let's say that the peak demand is 120 terawatt hours as a unit, 120 units, and that the least amount of electricity we use is 80. Why? Because you've always got your fridges going, in some factory lights and machines are going, whatever. Right? There's always a base load of electricity. Batteries are useless for that. They're not designed for base load, right? So the problem with renewables is because of its intermittency, it needs something to convert that into a base load, and we don't have that today, right? So the only way you can back up the intermittency of these units is by building a combined cycle gas turbine or a coal-fired plant to back that renewables up today. So the technology is not there. But having said all that, I have faith in human creativity, that when we really need to do something, we can do it, and that something will come along which will be a game changer. But it's not going to happen overnight. There's nothing I've been reading which suggests we're on the brink of doing that. But sometime, yeah, sure, I'd have hoped so.
Yeah, and I think the only real risk to allowances would be that we innovate faster than they bring down the amount, because even if our carbon starts to cut down quicker than we think, there's still a reducing amount of allowances every year. So it is a good market to look at for people, and I think that he summed up well the macro energy outlook, especially in Europe. I don't know if you want to touch on anything else before I let you go, and then
I'd just say on that point, so I already in my assumptions presume that in industries will, what we call abate carbon, will reduce their carbon emissions, and I've assumed that they're going to reduce them by 30% in the next sort of 5, 6 years. I think that is super conservative, or rather, sorry, that's super aggressive, right? Why? Because it's going to take the carbon price to get to a certain threshold, which is much higher than where we are, in order to make the cost of carbon for a company sufficiently high that it's actually worthwhile financially for them to invest in decarbonization. So let's assume that we're at 150, 200 euros, whatever that carbon price is. So the CEO will get all of his or her engineers in and say, guys, you've done a fantastic job. We are state of the art. We've got our production process, which we've honed over the last 5, 10, 15 years. It's perfect. It's fantastic. You're brilliant. Now I want you to go away and come back with plans to reduce that by 50%. You'll have the first reaction will be people say, "Did I hear that right? Do you mean 15? No, 50." You've got jaws down on the floor. Then they'll go away, and then they'll come back, and they'll come back with half-baked ideas. And eventually 2 or 3 you think, yeah, they're sensible, let's give them a go. So you start doing test pilots and projects and everything else, and eventually think, okay, the one we want to go for is this one. And then you finally get it fine-tuned and say, yes, that's it. Let's start rolling it out bit by bit. And then you roll it out and think, actually, no, this larger scale doesn't quite work. We need to change this, that, and the other. That whole process is a 4 or 5 year process, 3 if you're lucky, right? It's a long process. It requires ingenuity, creativity. It requires finance, all right? So I go back to what I said. I've assumed that in 5 years' time, industry reduces their emissions by 30%. Actually, what it really means is more than that, because most of these reductions in carbon emissions require an intensification of the electricity consumption, the processes, which means if you're using more electricity, of course, at the other end, you're burning more carbon. So the net is 30%, but the gross is probably more like 50%. With that in my model, I'm still getting huge deficits. And that's why I think the carbon price goes up. And that's why I think the Kakubi token is pretty exciting.
Yeah, I agree. I think it's just really hard to change an industry that's been built on fossil fuels for, however many years. And it's gonna take a lot of time and innovation and also policy change, and politicians don't tend to agree on things very quickly. So there's a lot of things that need to happen to reach the goals. And I think he summed it up well, and some of the difficulties they may face and why that could raise the allowance prices. With that, I thought I would give you an opportunity. This has been a great podcast, great content. Wonder if you could just share with anyone listening or watching where they can find more of your content.
Yeah, come on to www.kakubi.com. Kakubi is Kakubi. On there, you will find 3 videos, one explaining the EU emission trading scheme, one explaining Kakubi, of course, and another one explaining what the difference is between these European carbon allowances on the voluntary carbon market. And also on there, you'll have the link to our Discord channel, where you can come in and everyone has discussions and ask me questions or ask them questions, and it's pretty cool. So there's that. And if you want to, if you've got some idea about what would be cool to build on top of Kakubi, get in touch, on the Discord channel, whatever, we'll pick it up. And if you're interested in investing in Kakubi itself, then also give me a shout.
Awesome. Well, thank you very much for coming on. I really appreciate your time, and all the best with your project and any other endeavors you move into.
Yeah, great to be here. Thanks. And good luck as you grow the business.
Awesome. Thank you.
Joe is not a financial advisor and may have interest in the stocks discussed on the show, so do not take any information included within this podcast as a recommendation or formal advice. Thank you.